Hey everyone, Patrick Hughes. We're looking at our Stock in Focus segment. We're looking at Facebook, and we know that the most important thing when you start to see a new issue is you got to really be very careful about that. Obviously, we've talked about that. We said that unless it really started to break a certain range, that it probably could start to sell off a little bit there. And also, we felt that it could be worth a lot. I felt that down the road, people will just still accumulate this, and I do believe portfolio managers will. The difference is that the trend shows a difference. So this is why your opinion and what you think could happen really makes no difference until the price action takes place. That's why it's important to watch the price action. You could see right off the bat, right from the sell-off, and that's normal in an IPO. You start to see it break, but then you see it try to do what? It pulls back. It tries to retrace the prior swing high. It goes basically 50% retracement on that, basically. Then you start to see it test the prior swing low. What happens? You see the gap down. This is just very simple charting here. You see the gap down. You know this very violent move. You see it's very close in magnitude of the prior swings. So then you know, okay, we're pretty close to bottoming out here. You see it bottom out. You can see how this range become a very important resistance range, that because it really held, that was where you're going to really need to see prices break over if you're going to get bullish again, or it at least would have made sense. Now, any trading from in this range, or any bounce off of this, you have to consider what a very simple point is that the trend is down, and the trend, so any move will very likely lose momentum, and that's exactly what happens. So you see it starts to it tries to rally but can't, starts to close. Right before the close, you see it closing underneath the 21-day moving average. What happens? You see the break back down. You see it come to test the prior swing low, can't break it, can't break through the 21-day moving average, tests the prior low again. So now you have two double bottoms. Then you see it try to recover, and then you start to see it trading higher. It's starting to try to recover. You know you'll get a little bit of a bounce, but where does it go again? Where does it hit? That big line again, and support. Again, it hits the line again. And then you could see right here very, very clearly, can't break over that. You could see the 50-day start to trading under the 50-day, under the 100-day moving average. You see the 21-day holding it. Even in the prior day, you see a slight break, but still not over the 50, and still didn't